Good morning, everyone. Good morning, students. Almas, Rohan, everybody present. I hope you all have kept yourself in touch with the subject that we are studying. And I'm sure you all are ready with your doubts, your understandings, your misunderstandings. So, before I take up the next part in the topic, let me address your queries. So you can start asking me your queries. Yes, very good morning, Boma, Priyanshi, Dharni, Mujahid, Kinnari, Kesaria. Very good morning to all. Yes, let me know your query, students, in the topic that we have studied, what you have understood, not understood, or for that matter, whatever you all have studied till now. In that, if there is any query, doubt, which you want to get clarified, students, no doubts? That's great. So let me start with a brief revision of whatever we have done till now, so that it will act as a backup in case somebody missed out something, somebody did not understand something. So our topic is now cost accounting. Now in cost accounting, I tried to first explain you the broad structure of cost accounting by comparing it with financial accounting, so that you could understand and appreciate the difference, and you can understand how and why we have the different type of accounts here. So basically in your financial accounts, we broadly have four types of accounts: expenses account, the income or the revenue accounts, the assets accounts, and the liabilities account. Now, why only four types of accounts are prepared? Because ultimately the purpose of financial accounting is understanding your financial position, which will be identified by preparing these two statements. One is a trading P&L account and the other is the balance sheet. And both these statements cover these four accounts. So P&L has expenses, revenue accounts. Balance sheet has the summary of all the assets, liabilities. So this is how your accounting, that is a financial accounting, is designed. But when we come to cost accounting, our purpose in cost accounting is different. Here the purpose is identifying or determining your cost, fixing up the price, doing cost control, cost reduction, and also taking decisions relating to the business. Now, to achieve all these purposes, we need some different set of accounts that will serve these purposes. Now, what are these accounts? So firstly, we require expenses account, because without expenses, you cannot do costing. But the second category of accounts that we have is the product accounts. So that I can do costing, I can identify the costs, which will help me fix price. Also, by identifying my product costs, I can do cost control, cost reduction, decision making. Everything is possible. So broadly, I have two broad category of accounts. Now within this, if you compare your financial accounting, where also you have expenses, the difference is in financial accounting, we will have expenses headwise. So for every item of expense, we have a separate account. Like for purchases, we have an account. For wages, we have direct wages, indirect wages. Then we have salaries. Besides that, we have some other labor related cost account. Then we have all accounts like rent, electricity, depreciation, interest. So we have multiple number of accounts for expenses. But cost accounting says, I don't require expenses by these heads. For me, expenses are broadly three: material, labor, expense for resources, and further classified into direct, indirect. So basically the indirect ones becomes overheads, which are further function-wise divided into production overheads, administration overheads, selling distribution overheads. So we only require these broad accounts. So the material account becomes your stores ledger control. Your labor, all types, wages, direct, indirect, salary becomes your labor cost control account. And then the three overheads are the production overheads control, administration overheads control, selling distribution overheads control. Fine. After this, understand, for the product accounts, what we will be doing, I will prepare separate product accounts. So if I have 50 range of products, for each product, I will have a separate account, but not single account. For each product, I will have firstly the WIP account. For the same product, I'll have the finished goods account. For the same product, I will have the COS, that is cost of sales account. Now, we have something like the main ledger, which is our cost ledger where all these above accounts are prepared, and we have a subsidiary book. So for materials, we have the stores ledger. For labor, we have the labor register. For overheads, we have the overheads register. And then for the products, we have the WIP, the finished goods register. Now, as I said, for each product, I'll have a separate account. So in this ledger, I'll have those 50 accounts for those 50 products separately. So for each product WIP, I'll have a separate WIP account for each product. Similarly, for each product, I'll have a separate finished goods account. All this will be in the subsidiary ledger. Similarly, for each material, I'll have a separate stores ledger account. And that is why, since the accounts that we are preparing in our cost ledger are a summary of all these individual accounts, and these individual accounts are prepared in the respective ledgers, that is why these accounts are called as control. So when you write control, the person reading these accounts will understand that these are only summary accounts. For detail, you have to look at something else, which is your subsidiary book. So I will have my individual product account in the WIP ledger, and here I have one consolidated account for all products combined. So that is why it is WIP control. Similarly, for individual products, I'll have separate accounts for their finished goods in the finished goods ledger. Here I have a summary, a consolidated one single account for all my 50 products combined. So it is finished goods control. Same thing should be for COS, but somehow our books do not call it as control. So we are also not calling it as control. Now, besides these accounts, I will have my costing P&L account. So in costing P&L account, after I do stage-wise costing from WIP to FG to COS, here I will get the total cost of my product, which is at the end of the year transferred to costing P&L account. So this is how I will get the total cost product-wise. And I can easily identify sale product-wise because when I'm selling, I can mark it that this is sale for product X, for product Y, for product Z, and so on. So I will also have data of sale-wise or product-wise sales. Now, this will help me in comparing this in my costing P&L to identify the profit or loss that I'm making on individual product, which will further help me in decision making. So your cost P&L will have on the debit side the total cost, which will come from the COS account, and on the credit side the sales. Again, here it will be summarized because above all accounts are showing summary details, but wherever you want, you can get it product-wise also. But since in our cost ledger, all accounts are summarized, you will get these figures summarized. And then you'll have the net profit. Now, till this point, the cost accounting will be same irrespective of the approach that you are going to follow. Now, what are the approaches that we are going to follow? Since we already have to prepare financial accounts, financial books, the approach is, or the question is, can we merge both these books, financial and cost, or should we keep it separate? So that is where you have two approaches. If you are merging both these books, then the approach is called as integrated approach. If you are not merging both these books, the approach is called as non-integrated approach. Now, what will be the difference between both these approaches? So, my accounting, this part of my cost accounting will be same irrespective of approach. because these are the basic accounts which I need to prepare always. So I need to prepare all my expense accounts. I need to prepare all my product accounts. And at the end, I need to prepare my cost P&L account. These accounts are constant irrespective of my approach. Now, with this, I will be able to achieve all my objectives of cost accounting as well. But there is one problem. With these accounts, I will not be able to achieve the double entry. See, we all require double entry. With these accounts, I will not be able to achieve my double entry. 1 second, I think. Charging. Okay. Now to complete double entry, I need some more accounts. What are these accounts which I will need for completing my double entry? These are the accounts relating to various assets and liabilities like the cash and bank account, capital and the reserve account, debtors, creditors, other assets like land, building, plant, machinery, etc. Now, my first approach could be that I will combine both these books, financial and cost books, and prepare one integrated set of books. In that case, how my integrated set of books will appear? I will have all these accounts in the integrated set of books up to P&L. So this will serve my purpose of cost accounting. And then I will have separate accounts for all these assets and liabilities. Now, firstly, by preparing separate accounts, my double entry problem is solved because for every purchase or expense made, I need a cash bank entry. So where the double entry effect was required, by preparing these accounts separately, I will be able to achieve the double entry effect. And then from these accounts, at the end, I can prepare my balance sheet. So the purposes of cost accounting is served with these accounts. The purposes of financial account, that is knowing your profit and loss, and at the end, preparing your balance sheet is also served. This will whole become my integrated accounting. So if I have to just mark out, this will be my whole integrated accounting. In this case, I will not have any separate books for financial accounting. It will be merged here. Practically, this never happens because merging financial books and cost books is risky, because by doing this, you expose all your cost data to the world, because your financial books, your P&L balance sheet has to be published at different forums, has to be shared with many external users of accounts. That is where your cost accounts data will also be exposed, which we do not want. So practically, this approach of integrated accounting is practically not followed. Then the second approach is non-integrated, where my financial books, which are required, are already prepared, which you have studied from standard level, and I will prepare separate books of cost accounting. Now, this will be there in my cost accounting because this is the basic requirement. Now, I have only one problem left, that is a double entry. Because for double entry, I require the accounts for each asset and liability separately so that I can pass the second effect in that account. For satisfying that requirement, and now since I do not want integrated, I want non-integrated. Just to satisfy the requirement of double entry, I will open one account which will be a common account for all these asset liabilities that I need, like cash, bank, capital, reserve, land, building, plant, machinery, sundry debtors, sundry creditors, whatever asset liabilities I need, I will prepare one account which will be the common account representing all assets and liabilities. And then same again, whenever I'm incurring any expense or making a purchase, I'll debit these accounts. Credit entries will fall in this account. So for completing the second effect, the account that I needed was the asset and liabilities account. But here in non-integrated, I will be having one account which will be representing all these assets and liabilities. So In non-integrated, one, I have my separate financial books, like what you studied in standard 11 with the subsidiary books. And then I will have a separate cost accounting book where this is my main ledger, in which all these accounts appear. Plus, last account in this will be this, which will be my summary of all assets and liabilities. And because of this, I will be able to, or through this, I will be able to achieve. So through this, I will be able to achieve my cost accounting objectives. Now with this, we went into detail of how cost accounting entries are done and how these accounts are prepared, taking the non-integrated as the base. This common account which is prepared in non-integrated has a name. The name is either cost ledger control or it is either general ledger adjustment. Fine. So this is what we studied, and we also studied what are the journal entries, because from journal entries only we have these postings. Till this point, we studied the entire cost accounting in our previous lecture. Now, we will be solving few sums from the sheet which I had already uploaded last time. From that sheet, I had requested you all to solve few sums and comes so that now when I'm discussing or solving, you can have a direct comparison. So let me take up the sum, and for solving that sum, let me draw the accounts so that I can show you the posting also. Okay, let me before that take up the queries if any. So Priyansh is saying these integrated accounts are like other subsidiary books for particular individual account, and this non-integrated cost account is somewhere like cash book. See, but I cannot say that it is like cash book only. But in principle, what I am understanding is you mean to say so you mean to say maybe you are calling it as cash account maybe because you want to say that all entries are reflected here like in cash also. That is why you are saying, or you are comparing it with that cash account. That is okay, but principally let us not keep it that way. See, it is simply the combined account for all the assets and liabilities. So that account will also mean a cash account, that account will also mean a building account, that account will also be your debtors account, that account will also be your creditors account. So I will put it this way, beta. Panipreet, but don't worry. Now I'm going to take up sums only. That all treatments you'll understand, because I know there are 2-3 scenarios where generally as a student we find something missing or difficult, that you'll understand. Okay, don't worry, Priyanshi. As we solve sums, the conceptual part will get clear. Okay. So students, I hope everything up to this stage is very, very clear to everyone. So then let us proceed. No questions further, students? So we are good to go with the practical sums. Now, if you remember, I had said that when we are solving these sums, what are we supposed to do is we are first supposed to prepare these accounts so that they are handy for passing the entries. So your first account is the stores ledger control account. I'm just using the short forms for just speeding up the process. You should leave around 8 to 10 lines. Then you have the labor cost control account. You can leave 6 lines. You have the production overheads control account. Again, you should leave 8 to 10 lines. Then you have the administration overheads control account, 6 lines. Selling and distribution overheads control account, 6 lines. Work in progress control account. This again 8 to 10 lines. Better is you can always keep the outer limit. Then you have the finished goods control account, 6 to 8. You have the cost of sales account, 6 to 8. You have the costing, profit and loss, that is cost P&L account, again 8 to 10. And then the last account, which represents these assets and liabilities, that is the cost, ledger, control account. This anyways is the last, and this is the biggest account because all major entries will flow from here. We couldn't check as there was no answer. But beta, why you were supposed to check? Checking we are going to do in the class, na Rohan? So I intentionally did not post the answers because if I post the answers, then there is in many cases copy paste. You don't then apply your minds. That is why the answers were not posted. Anyways, we are now going to discuss the answers. So don't worry. So let us take up the first sum. So since it is accounting, you will be having opening balances. You have opening balances of these three accounts, which represents your stock, stock of material, stock of work in progress, stock of inputs. And then the combined amount of this will obviously reflect in CLC. So remember this, the net effect of all these accounts will be reflecting CLC, where this will be helpful if in a question, this opening balance is not given, but all other balances are given. So remember, the amount of the opening balance of this is the net effect of all the other opening balances, because your opening balance sheet is always tallied. So just remember this analogy and logic, which you can apply whenever the opening balance of CLC is not given. Okay. Now for simplicity again, I will be using only figures in thousands. So my opening balances are 35, 38, 25. So it is 35, 38, and 25 to balance brought down. To balance brought down. To balance brought down. And then by balance brought down. How much it is? 98. Okay. Now we start passing the entries. Purchases. So under raw material, they have given these many entries. Now students, those who find directly passing the cost entries difficult, my simple suggestion would be first find out what will be your regular accounting entry for this. Once you get the regular accounting entry, you have to simply change the names. So like for purchases, what is my regular accounting entry? It will be purchases to cash, bank or creditor. This is my accounting entry. Now we have to simply substitute the names. Here for purchases, we have the stores ledger control account, which represents the material. So it will be representing the purchase. And had this method been my integrated, I would have used the same account heads. But since this method is non-integrated, I will use the account head, which is representing these accounts. So it is CLC. So my entry would be SLC debit, that is the stores ledger control debit, and CLC credit by rupees 95. So it is 2 CLC rupees 95 by SLC rupees 95. So this becomes my entry for purchases. Fine with all? Then it is returns. Now exactly the entry will be opposite of purchases. So now what will happen? Now CLC would be debit and SLC would be credit. Same, because now I'm returning back the material. So my material account has to be reduced. So it will be credit, and my supplier is getting back the material. So it is debit. So now it is CLC debit, SLC credit. Fine with all? Then materials are now sent for production. So when I'm sending to production, if you remember, we have to transfer it to the factory. This represents your factory where the production is happening. So I will be transferring it to the factory. How much is the amount? 98. Okay. So from stores, the material is going to the WIP account. So WIP is debited and stores is credited. Same return. So whatever you had sent for production, after the production is complete, the surplus material is returned back to you. So we have exactly opposite entry where now the factory is giving back to the stores. So by SLC, amount is 3. And materials is getting back the materials. So it will be debited by the amount. So students, anybody has any doubts with any of these first 4 transaction entries? No queries? Perfect. Excellent. So I'm sure you all have passed these entries at your end because I had requested you all to solve at least first 3 questions compulsory. ठीक है. So now these 2 transactions are for labor. Now for labor, you have to remember one thing. Like in case of material, you have separate transaction for purchase and then for sending it or charging it to your product. You will not have separate transaction in labor for firstly paying the wages and then secondly for transferring the wages or charging the wages. You have to pass both entries with this single input given in the question. So the question will only give the data once for labor, but you have to pass both these entries. So firstly, I am passing the entry for making payment of wages. Again, what will be my accounting entry? Wages debit to cash bank. This will be my accounting entry. Now, for wages, we have the LCC account, and for cash bank. Had this been integrated, I would have posted it in cash bank only. But since this is non-integrated, I will post it to CLC. So I will combine both these figures because both are wages, direct and indirect. So the total is 65. So my entry firstly for making payment of wages is labor debit and the cash bank credit, that is a CLC account. So it is to CLC 65 by labor cost control 65. This is for making payment of wages. But the second transaction is never given separately. That is for charging this wages. This you have to do by yourself. So with this same single transaction, first I will pass entry for paying wages. Now I have to pass entry for charging these wages. Now, what is the entry? Direct wages, productive wages, manufacturing wages, factory wages. Generally, these are the terms used. It represents what? It represents the workers who have worked in the factory for doing production. So they have worked on the product. That is why it is a direct wages. This I have to charge to factory. Factory is what? WIP. So WIP debit. And who is giving to WIP? Labor is giving. So for the first 40, my entry would be this. Now the indirect labor, they have also worked. But if you remember in the last session, when I was explaining you the transaction, I said that all indirect would be first going to the overhead account because all indirect has to be named as overheads in costing. So whatever is your indirect, maybe it may be material or labor, you'll first transfer it to the overheads and then overheads will charge it by their name. So I have to transfer this amount to overheads. Now, whenever it is indirect wages, nothing is given. We always understand that wages are paid to workers. Workers are working in factory. So I will transfer it to the production overheads account only. And who is giving it to production overheads? It is again given by labor. So labor is credited. So my next entry would be this. Now, one small mistake I have committed, which I think nobody observed, is the amount. The direct wages is only 40. So to factory, I'm transferring 40 and to production overheads, I'm transferring 25. Correct? Banipreet, beta, you had doubt in this, if I'm not wrong. Please check if your doubt is addressed and resolved. So students, remember, you have to pass 2 entries for the same transaction. First is for making payment. where you combine both the figures, and then for transferring it to your respective accounts where this labor or wages is going to be utilized. So now I have to pass these two entries. So I have to do the posting. So factory, that is WIP, will be debited with 40. So here you are charging the direct wages and it is given by the labor. Indirect wages has to go to overheads. So from here it is transferred here to LCC 25. Okay. Bunnypreet is saying, sir, in theory part of module, it is written to make wages control account. So what we have made, beta, labor cost control, wages control. See, these are terminologies. There are going to be parallel terminologies like for overheads, your module itself, or if you see past exam paper, somewhere they will call it as manufacturing overheads, somewhere they will call it as production overheads. So these are parallel names given. So you can call it as labor cost control, that is accepted. You can call it as wages control, that is also accepted. No problem at all. Fine, Bunnypreet. Please now you'll have to understand that there could be parallel names which are used even in cost sheet. When you're preparing cost sheet, you will find parallel names used for many of these account heads, right? Like for material also in cost sheet, in some sums they call it as direct material, in some sums they may call it as raw material consumed. So that is fine. You have to understand the ideology. Even in our module, you will find different sums using different terminology. So you can use either of them. You call it as wages control account, you call it as labor cost control, whatever is comfortable to you. Now, the second type of entry is also done, that is for labor. Then comes the entry for overheads. Now in overheads, firstly you have the entry for incurred, and then here you will have the entry for charging these overheads. So first I pass the entry for incurred. So factory overheads incurred is 50. So I debit my factory overheads, and since it is incurred, credit is CLC. In CLC, I'll write by production overheads control. Now here, they have combined the selling and administration account. So I will also combine it. So instead of having separate accounts for administration and selling, only for the purpose of this sum, I'm combining both these accounts because that is what is the requirement of this sum. So it is selling and administration overheads control. Okay. The debit amount is 40. And in CLC, I will write selling and administration control 40. Fine, students. So I've also passed the entry, posted the entry for expenses incurred for overheads. Now, you have the transaction for transferring the product balance from one account to another. So firstly, when production is going on in the factory, I charged all the expenses to factory, which is my WIP. Now, when the production would be completed in my factory, the factory will transfer the finished goods, that is the completed produced goods, to the godown. Godown is represented by the finished goods account. So this is the transaction given cost of finished goods, which are transferred to the godown. Now you have to understand from where they are transferred. They are transferred from factory. Factory is represented by WIP. Warehouse or godown is represented by finished goods. So I'm transferring my completed goods from my factory to my godown. 213 is the amount. So this is factory. So the factory is transferring the goods to godown, and the godown is getting the goods from factory. Please visualize this. If you visualize these transactions, understanding them, remembering them would be easy. So I have mentioned that treat this as your godown. This is your factory. And also, if you remember, I had mentioned that treat this as your customer. Just to understand the flow of the entries. So until production is going on, all expenses of production are debited or charged here. Once the production is complete, the value of finished goods will be transferred. physically, because the goods are also moving. If you visualize in a factory, the finished goods are completed and they are being moved to the stores or the godown. So that is where you are also moving the amount from your factory to the godown. Again, when these goods will be sold, these goods would be moving from your godown to the customer. So the transaction given for this would be cost of goods sold 210. So now I will also be moving it from my godown to my customers 210, and in customers they will be receiving these goods, so debit. Correct, students? Then for this same transaction, I had shown this value at cost. Now I'll show this value at the selling price. So the goods which are being sold, it is at cost, this amount, and at selling price, the amount is 300. So in short, it is the sales value. So I will now be doing posting for sales value. If you remember the transaction for sales, I will be crediting it over here. And whom I debit? I debit the debtors. I debit cash bank, which is represented by CLC. In bracket, I'm writing sales just for reference purpose as to what this transaction represents. So to cost P&L in bracket sales 300. And students, now factory overheads are applied. Applied means charged to the production at 150% of wages. Now I have to charge the factory overheads using the ORR. ORR is given as 150% of wages. Wages, direct wages was 40. So I have to take 150%, which will be 60. And this I will charge to the WIP account, that is the factory account, 60. How did I get this 60? It is 40, which is the direct wages multiplied by 150%. So here the amount is getting charged. So overhead is getting charged to my WIP is 60. Now, with this, all transactions are over. Now I have to do balancing. If you remember, in my overheads account, there will be some under over absorption. That is either my overheads are charged more or less, which is called as under or over absorption. Now they have already mentioned what is to be done. Any under or absorption has to be carried forward. Now, since they are specifically asking me to carry forward, I'll carry forward. Otherwise, if this was not given in the sum, I would have transferred the difference of overheads to my cost P&L. So here they are asking me to carry forward. Further, for this administrative and selling overheads, which is the combined account, they are saying that treat it as period cost, which means that you directly transfer it to P&L. In short, we are not required to charge this overheads to my products. I will directly transfer it to P&L. Fine. So I've understood what I have to do in the overheads account. Now, I will be doing the balancing, starting with material first. I had opening, I made purchases, I sent it to production, the production returned it, I returned it to my customer supplier. All these regular transactions are being posted. Now I have my closing balance, buy balance carried down. Now this closing balance would be posted here, representing the closing balance, right? So how much it is? It is coming as 32, if I'm not wrong. So my closing balance for my material account is 32. So this will be carried forward to the next year or next month. Labor account. Labor account, whatever debit I made, the same credit I made. So it is already closed. No difference. Nothing to do. Overheads. You will always have a balance here, which represents under over absorption. And I repeat, generally this under over absorption will transfer to cost P&L. However, here, since the question has specifically asked me, I will not transfer it to cost P&L. I will be simply carrying it forward because that is a specific requirement of this sum. So by balance carried down, the difference is 15. This account is also tallied. I repeat again, this I am doing specifically in this question because they have asked me to carry forward. Had this not been mentioned in the sum, I would have transferred it to the P&L account. Fine. Now this selling administration, they have specifically asked me to treat it as period cost and transfer it to cost P&L. So I'm transferring it to cost P&L. Even this account is tallied and closed. Now remember, please do the parallel posting immediately. So selling and administration transfer to cost P&L. Now coming to my WIP, that is the factory account. I had opening balance in WIP. Material was transferred. Labor was charged. Production overheads were charged. Some material was returned. And whatever I made production, I transferred it to the godown. Now again here, I will have my balance carried down, representing my closing WIP. So it is 236, 23, 26. So is it 30? Similarly, finished goods, I had opening balance. I received my finished goods from the factory, the produce finished goods. I sold it to customer. Again, I'll have my stock here, 28. Which one is 20, beta? Rohan, which one is 20? WIP balance. Okay. How much I've written? I've written 30. Okay, it is 20. Correcting it. Yes. So it is 20. Fine. Now, whatever is my amount in the COS account, I will transfer at the end to cost P&L, because this represents my total cost of goods which I have sold. So it gets transferred to cost P&L. Again, this account is now closed after transferring the entire balance to cost P&L. And my cost P&L will show the net profit or loss, which I will transfer to my capital and reserve account, which is represented again by CLC. In bracket, I will write what this represents. So this comes to 50. This I will post it in my CLC account by cost P&L. In bracket, I'm writing what it is. It is net profit 50. Right? And then it is to balance carried down. Calculate the balance, students. I'll be back in a minute. Till then, everybody kindly check your postings and see if something is not understood or if something is wrong in your, correct it. So students are saying that the balance of CLC is 95. Please check. Confirm. You all are getting 95. Good. So this is how I will get my cost accounting done. I'm sure everybody is now getting the feel of this cost accounting, right? Take a screenshot if anybody wants for their future reference. Let me proceed to the next question then. This is my next question. Again, we follow the same format. I will do one thing. The second question, I'm not preparing the accounts. I'll just discuss the entries. You all check the entries at your end. Third question, again, I will solve because it has some very special, interesting transactions. This second, I'm not solving completely. Otherwise, we won't be able to complete all the questions that are there. This, I'm only discussing the entries. You may note down or you may just do the auditing if you have already done the accounting. So firstly, we have opening balances in these three accounts, which represents my stock. Here you also have an opening balance in your factory overheads control account. Now, what does opening balance in your overheads control account represent? One, it can represent the carry forward difference of under or over absorption. Like you saw in the previous sum, we had carried forward the under or absorption. This may represent that one, or it may represent the outstanding or prepaid balance in these accounts. So if it is a credit balance, it represents the outstanding factory overheads account. So these are the two possibilities what overhead balance would represent. Again, the net effect of these four has to be this. You can cross check on your calculator. So for example, if in my question this was not given in the opening balance, purposefully they will not give, then you have to remember whatever other opening balances are given, make a net of it, and that net will represent the opening balance of your CLC account, that is a cost ledger control account. So my first posting would be the opening balances. Now, so I will ask you all, give me the journal entry for this. You can use short form so that it will be fast. Give me the journal entry for this first transaction in the question. Yes, students, give me the journal entry. Only two students. Good, Banipreet. Yes. Jaindra, good. Priyanshi, good. Students, entries are not difficult. You have to first understand what the transaction means. When they are saying finished product at cost, it is nothing but they are talking about the cost of goods which are finished during this month. Now, first understand what this transaction is. Now, what we do of goods which are finished or completed during the month or the period, we transfer it from factory to go down. So until unless you understand the transaction, your entry will not be correct. So if you are not getting correct entry, it has nothing to do with the accounting knowledge. It is because you have not understood the transaction given. So when they are saying finished product at cost, it means they are talking about those goods which are completed by the factory during this period. So it is the cost of goods finished. And once you understand this, you know that finished goods are transferred from the factory, which is my WIP, to the godown, which is my finished goods control. So the entry is FGC to WIPC. Correct? Next is manufacturing overheads incurred. Chalo, fast. Give me the entry. Overheads incurred. Students, make it fast. Superb. Correct. Very good. Gurmeet, Rohan, Prem, Jayendra, Banipreet, Neeraj. Superb. Priyanshi, you have not given the name, though I believe your understanding is correct, but you have not given the complete name. No, Dharani, not correct. So see, what is a transaction? The transaction is of overheads incurred. So when overheads are incurred, you debit the overheads account. So I debit the overheads, which is the production overheads control, and I credit my cash bank, which is the CLC. Right? Anybody, any questions? Now I have the expenses of material which is being incurred. So I purchase raw material. It will be SLC to CLC. Again for labor. Again for labor. I will have to do two things. Firstly, I will pass entry for incurring. So it is LCC, that is labor debit, to CLC, and I will combine both these amounts. So it will come to 72,195. So it is 72,195. So first transaction is for labor cost incurred. Second transaction is for charging this. So WIP debit by the direct wages amount. Production overheads debit by the indirect wages account amount. And it is credited to the labor. So LCC credit 72,195. So the entry for this labor transaction is I debit first the labor, I credit the cash bank with total. Then direct wages are transferred or charged to the factory, that is WIP. Indirect are transferred to production overheads to LCC. Anybody? Any questions? Please put it across to me so that I can immediately clear your doubts. Yes, Gurmeet. Perfect. Priyanshi, you can say so that we are nullifying. Our purpose is not nullifying. Our purpose is posting the labor to the respective accounts because we have to charge. See, in costing, basically, you have to charge every expense. Now, you understand this, that labor cannot have a closing balance. So, by default, this total amount gets posted. But in one of the sums, you will find that this may not happen for a particular reason. That is where the amount will not balance. Otherwise, in 90% of sums, labor balance debit credit will get nullified immediately. Fine, Priyanshi? Now, the next transaction is that these goods I have sold to my customers. So when I have sold the goods to my customer, I debit the customer, which is my COS. And from where these goods are going? These goods are going from my godown. So I credit the godown, which is the finished goods control. So customer, which is represented by COS, and go down, which is represented by FGC. Now, the material I am using for production. So factory, I'm transferring the material is debited, and from where it is getting transferred, it is getting transferred from the material account, which is SLC. So factory is getting the material. So factory, that is WIP control, is debited. Who is giving the material? The material stores is giving the material. So stores ledger control is credited. Now, sales return at cost. I again repeat, students, you have to understand the transaction. Entries, I think you all will be able to construct correctly in 99% cases. But the problem is, we have only 50% correct entries, 40% correct entries, remaining are incorrect, not because your accounting knowledge is incorrect or incomplete. It is because you have not understood the transaction. So let us understand the transaction. Don't you think this transaction's reverse is this? So here we had posted for goods which are sold. Here we have to do the same thing for the goods which are returned. Now here, when the goods are returned by my customer, because they may not have found my goods proper as per the requirement, I will pass exactly the reverse entry what I passed when I pass the entry for selling the goods to customer. So Banipreet, you're right. Priyanshi, what entry you have posted, that is correct if I had to pass the entry for sales return at the selling price. Here we have sales return, but at the cost price. So when I'm saying sales return at cost, I have to pass the opposite entry of sales made at cost. So this was the entry for sales made at cost. So I will pass reverse entry of this. Right, Priyanshi? Yes, Gurmeet. Correct. So I have to pass the entry. Since the goods are coming back to me, so they are coming back to my godown. So my godown, that is finished goods control, is debited. Who is returning back these goods? My customer is returning back. So COS is credited. Good. Excellent. Similarly, I have returned back the material to my suppliers. Again, if you understand, it is exactly the opposite entry of this. So whatever material I purchase, I'm returning it. So my entry would now be my supplier, who is CLC, debited to the material account, which is SLC, which is credited. Very good, Gurmeet. Good, Rohan. Now I'm charging the overheads. So manufacturing overheads I have to charge. Where manufacturing overheads will be charged? It will be charged to factory. So factory is my WIPC, debit, and I'm charging factory overheads, manufacturing overheads. So POC is credit. Sales, they have directly given net of returns. So I don't have to pass two entries for sales, firstly sales, then returns. So simply what I will do is I will pass one single entry for sales, which is net of returns. So this entry will be of sales. The sales entry, I'm sure you all now by know. I debit my debtors, cash bank, which is represented by CLC, and I credit my cost P and L. Correct, students? Everybody understanding this? No queries or doubts with anyone? Good. Very good. Is this clear? Anybody? Any problems with any of these transactions? You can put across your queries, because by now you would be having some queries, because we have solved two questions. Now, since I have not posted these entries, that is why we are not doing the entire balancing part. Anyways, it is same for all sums. So next we will do this. Rohan is asking what will be entry if sales return at selling price would be given. Very simple, beta. If they would have given me sales return also at selling price, what would be the entry? It would be opposite of this. This is the entry for sales. So what would be entry for sales return at selling price? It would be opposite of this. I will debit cost P&L. I will credit CLC. Correct, na, Rohan? Good. Let us proceed. Now, I will again do complete posting balancing of this transaction because this is one of the biggest question with some new transactions in it, right? So the company operates a historic job costing system which is not integrated. Fine. Anyways, whether it is integrated or not, I get to know from the opening balance itself. In the opening balance where they are giving this cost ledger control, I'll get to know whether it is integrated or not integrated. So now again, let me prepare the accounts. You all also start parallelly solving this. So my first account is my SLC, 8 to 10 lines. Then it is LCC, that is labor, 6 to 8 lines. Then it is production overheads control, again 8 to 10 lines. Then it is my administration overheads control, 6 to 8 lines. Then it is my selling and distribution control, 6 to 8 lines. Then it is my work in progress control. It will be 8 to 10 lines. Then it is my finished goods control. Then it is my COS. Then it is my cost, P&L, CLC. But here, now you have a new transaction. See, they have given you a new opening balance called as building construction account. Let us first understand what it is. So building construction account basically is where you are not buying a ready-made building. You are rather constructing your own factory building, you're constructing your own warehouse. So till it is under construction, the warehouse or the factory, it appears as a special account in your financial accounting also called as the building construction account. So I will open that account. Just for your understanding, I'm purposefully writing building under construction account so that you'll understand what it is. Though the question is only saying building construction, but for your understanding, I'm purposefully using this terminology. So till my building, for that matter, it may be my plant and machinery, anything. I may be manufacturing or constructing my own assets. So that will be shown under the under construction account till the construction is completed. And then last account is again my CLC, which represents all my assets and liabilities. Perfect, students. Now let us do the postings. So first, opening balances of each account I will post. Building construction 10 and the balancing figure is 540. Again, you can cross check. The net of these 4 accounts has to match with this. So buy balance brought down, to balance brought down, to balance brought down, to balance brought down, to balance brought down. Now we go to the transactions. Again, first transaction is relating to the materials. These are the different transactions that has happened. First, you have purchase material. Now, purchase material means material is debited and your supplier is credited. So, material account debit, CLC account credit. Second is, I have now used this material for production. So, this I'm sending to my factory. So by WIPC, and since factory has received this material, so debit to SLC, correct? Now, I have sent this material for general maintenance. So it is like indirect material overheads. I will transfer it to POC. Now here, they have not mentioned it is maintenance of what. I'm assuming it is general maintenance of machinery. Had it been maintenance of some of my office equipments or maintenance of some of my sales equipments like the delivery van, etc., I would have posted it to the other overheads. But if nothing is mentioned, you should comfortably assume it is relating to your factory only, the maintenance and all, and you should post it to production overheads. Now, this is something new. I've also consumed some material for constructing my building. So obviously this has to be charged to the building account itself. So I will transfer this to my building construction account. And building construction will get this material, so debit. So understand this. Since I'm making my own building, for making or constructing the building, I will require some material like cement, steel, whatever. And that I am also transferring to that building under construction account. Are all the material entries clear, students? Anybody having any doubts, any queries relating to any of these entries? Good. Let us proceed then. Now, coming to wages. Now in wages, you have to be very careful with the terms used. Till now, they were giving you production or the direct wages and the indirect wages. Now here, firstly, they have said gross wages. When they say gross, we all understand it means all wages combined. And then they have given breakup. So firstly, gross wages, it will mean direct, indirect, everything combined. So this is my total wages, 150. So as you know, we first pass entry for total wages paid. So it is labor debit and my CLC, which represents the cash and bank, that is credited with the labor. Now the breakup. Out of this gross, indirect is how much? 40. So I transfer it to overheads, 40. So in overheads, I will debit labor 40. Correct, students? Then out of this, I've used for constructing the building 10. So I will transfer that much to the building account. So by building construction 10, and this building construction is debited to LCC 10. Now, interesting part. They have not given any further details of wages. And this gross is not matching with this breakup. This is where I purposefully selected this sum 1 because there are more number of transactions, and 2, there are some new or different types of transactions. Now, we all saw in the previous question that generally the wages debit and credit matches because whatever wages I have paid, I transfer it somewhere because there can be no opening closing balance. But here that is not happening because they have purposefully retained back some information. Now, from whatever is your understanding experience till now, tell me what could be the differential figure. I'll tell you the amount. The amount is 100 because 150 is paid, out of which they have given me details of 14, that is 50. So 100 rupees details is missing. What could be this 100? I again repeat, accounting is simple, but you have to first understand the transaction. If you understand this transaction, you yourself will get the accounting entry. Very good, Dharani. Gurmeet, you are correct, but you are not giving me the nature. You are directly giving me the entry. But again, you are also correct. Very good, Rohan. So, students, you have to understand in wages, the first and the most important part is the direct wages. So this 100, which is not given in the question, has to be representing the direct wages. Once I identify the transaction, now everybody knows what will be the posting. I again repeat, the problem is not with accounting or not understanding what is debit credit. I'm sure you all understand that very well. The problem is you have not understood the transaction, which is where you have to focus more on. So here, as you can see, the direct labor is this 100. Direct wages is this 100. And once you get to know this, you know what posting has to be done. By WIP 100. And since I have posted everything, I know this account is closed. So here in WIP, I'll debit this 100, which represents my direct wages. Fine, students? Now we come to overheads. Factory overheads, which is here called as works overheads. What are they saying? Actual amount incurred excluding the above item. So besides that, indirect material, indirect labor, what is given above. Besides that, the other amount of overheads is 160. So this is the overheads incurred. We know what is to be done. It will be debited in my overheads account and credit would be given to my cash bank, which is represented by my CLC. So 160 is the overheads, production overheads, which I have incurred or paid. Now, out of this building, I have consumed 20 rupees. So I have to charge this much of overheads to building. So it will be by building construction account 20. And this I will debit to building construction by the name of overheads. Correct, students? Now the interesting part. For the first time, they have given the entry for under absorption. Generally, this under over absorption is my final balancing figure of the overheads account. But here, they have given me this as a transaction. It means I will have something else as my balancing figure that we'll have to identify when we will close this account. But for the time being, I have to pass some entry for this. Tell me what entry is passed. What is to be done if under absorbed overheads is given? Give me the entry, students. Chalo, tell me, what would be the entry for this? Very good, Rohan. No, Bunny Preet. Others? Others? Very good, Jayendra. Dharani, your entry is incomplete. Give me the complete entry so that I can tell you right, wrong. Yes. Maybe you may be right, Dharani, but your entry is incomplete, so I'm not able to comment. Others? If there is under or absorption in my overheads, what do we do? No other entry, students? Okay. Yes, correct. Very good, Gurmeet. So, see, if you remember, I'd explained at the start that whenever there is under or absorption, you have to transfer it to your cost P and L. So what I will be doing is from my overheads account, I will be transferring it to cost P and L. So by cost P and L and in cost P and L to production. Sorry. So it is by cost P and L And here two production overheads control. How much is the amount? The amount is 8. So this 8 rupees representing my under absorption. I'm transferring it from my overheads account where there is this difference of under absorption to my cost P and L account. Is this very clear to everyone, students? Yes? No doubts? Pakka? Chalo. Good. Now again, this sum has something new. Now please understand, students, royalty paid again is a direct expense. If you remember your initial questions or even your cost sheet sums, this represents your direct expense. Now, when I'm saying direct expense, interestingly, we do not have any separate account for direct expense. But had I prepared a separate account for direct expense, what entry I would have passed for making payment of direct expense? It would have been direct expense account debit to CLC, which represents cashback. Fine. But then again, this direct expense has to be charged somewhere. Where it is charged to my factory. So I would have charged this direct expense to the WIP account by this entry. So firstly, entry for paying the direct expense. Secondly, for charging this direct expense. Now, since I'm not preparing a direct expense account, why? The reason is simple. It is hardly given in one of the sums. So we do not open a separate account. But then how will I do posting here? So it is simply I'll combine both these entries. If I combine both these entries, what will happen? My direct expense debit, direct expense credit will get knocked off. And the entry which is left is this. So now the combined entry for this will be WIP controlled debit to CLC. To CLC. Debit. And here by WIP control credit. In the bracket, I'm mentioning what it is for my future reference. So this is what I did for royalty, which is my direct expense. Then again, here they have combined the selling and administration overheads. So I will also combine this selling and administration overheads control account to CLC 25 in CLC by selling and administration overheads control 25. Correct. Now the next transaction is for sales by CLC into bracket sales. And in CLC, I'll write to cost P&L. Right? Is this clear to all? Done. Now, again, this transaction I selected or this sum I selected because it has again something different from other sums. What it is, see. Now here, they have given you the closing balances of stock of raw material 55 lakhs and stock of WIP 25 lakhs. Again, students, normally these we find out as a balancing figure. Here, they have given it as a transaction. Anyways, even if they have given it as a transaction, we have to do posting. Now, the posting for this would be the entry for my closing balance, which we all know is by balance carried down. So I have to now post these entries as a balancing figure, that is by balance carried down. So in my material account, that is SLC, it will be 55 lakhs. In my WIPC, it will be 25 lakhs. So it is by balance carried down 55. By balance carried down 25. Correct. So this is my posting. Balance carried down here. Balance carried down here. Done. Clear? Any questions or doubts, students? Students, any questions or doubts? Good. So let us proceed now. Now again, something interesting. They are saying loss arising in their materials has to be treated as factory overheads. So they are accepting that there is some loss, but the treatment that they want is not to transfer it to P&L. Generally, if there is any loss, my simple postings would be, my simple entry would be, I will be transferring it to my P&L. But here they have specifically asked me not to transfer it to P&L, but to transfer it to factory overheads. Fine. If the sum wants so, I will do it. I will find out the balance, and the balance I will transfer to my production overheads control. And then my account will be closed because already closing balance we have posted, and whatever is the balance I am getting here, they want me to consider it as production overheads. So what is my total? My total is 60, 55, 115, and here it is 120. So my balance is 5. Remember, students, this is the balancing figure which I have got here. This balance, they want me to consider it as factory overheads. Hence, I will transfer this over here. So, by production overheads control account, this is the balancing figure. Please understand this. So this amount is not given in the sum. This is my balancing figure representing the loss. But they want me not to transfer it to P&L. Hence, I'm going according to their instruction. I have posted it in my production overheads. So this account is closed. Fine, students. Then the building under construction was completed. Again, an interesting point. Now, what is so big thing in this if the building is completed? Yes, it was under construction. One day it would complete. But then interestingly, we need to do some posting of this. What is that posting? Let us understand. So my building under construction, till the time it was under construction, I had a separate account. Now, once the building is completed, it has to transfer to the building account. And where is my building account? My building account is this. So when they are saying that the building under construction is completed, I will transfer it to, had it not been completed, I would have again carried forward the balance as my closing balance of building under construction. But they are saying that now the building is completed. Whatever construction you are doing is done. Now it has to go to the building account. And building account is represented by CLC. So 20, 30, 40, 44. This I'm transferring from building construction account to my building account, which is represented by CLC. I hope you are getting these transactions, students. These are some very interesting new transactions of this question, and that was my only reason why I purposefully selected this question. So one, you will have all the regular type of entries which you'll find in 80-85% of the sums. One of the sums will have such new transactions. But again, I tell you students, if you understand the transaction, then finding out what debit, what credit, I'm sure you all are competent to do that. You all are not getting it correct because you are not understanding the transaction. So please focus on first understanding, identifying what the transaction is. Posting will follow. Okay. Proceeding further. Again, something very interesting. See, they are saying company's gross profit margin is 20% on sales. Now, till this point, we never were given my profit margins. But now they are giving me profit margin. Now, what I have to do of profit margin? Answer is nothing. Because nowhere in this whole accounting we write gross profit. Yes, we do have entry for profit, but that is of net profit. This is not your net profit margin. Had this been my net profit margin, this would have given me the amount of net profit. And we know net profit is transferred from the cost P&L to CLC. I would have done that. But this is not net profit. This is gross profit. Now, if they have given me gross profit, what I do is I prepare a working note. I'm just doing it here so that you can see it at one place. The working note is calculation of cost of goods sold. How do I get this? I know my sales, which is 450. And they have given me GP, which is 20% of 450. That is 20% of sales. So it comes to 90. Now, if I deduct from sales the GP, what is left is my cost of goods sold. So this becomes another transaction. So from sales, I deduct GP. What is left is the cost of goods sold. And we all know that when I'm selling the goods and the amount is the cost of the goods which is sold, the transaction is I transfer it to customer from my godown. So this will be the journal entry for this transaction. So the transaction that I get from this particular data, that is 20% is my profit margin, GP margin, is I get the transfer of transaction of what is the cost of goods which I've sold to my customer. And then we know the posting customer debit, godown credit. So this is the posting which I will be doing. So customer debit, and the amount is coming from my godown, that is finished goods. Right? Understood, students? Prepare relevant control accounts, record the above transactions, done. So all transactions are done. Now we will do the balancing. So you could have seen so many new transactions, something very interestingly, some differential figures we are getting. So this is where this question stands out. Now I'll do balance. This is already completed. This is already completed. Now coming to production overheads. Now in production overheads, interestingly, they have already given us the under over absorption that was done. Now the question is, if I'm having a balance, what this balance would be? Again, the same point, understanding or identifying the transaction. If you understand and identify the transaction, posting, I'm sure you will be able to tell me correctly. But the challenge is, what is the transaction that has happened? So, firstly, I have paid overheads. Then I've got something from material. I've got something from labor. Again, the material loss, as per the question, is posted here. Then I've consumed this overheads for building. And then there is some under absorption. But then what is the missing amount? Here, they have already given me under absorption. Generally, we find the under or over absorption as the balancing figure. But that is given. So what is missing? Can anybody tell me? What is the missing factor of this question? No, Rohan, outstanding expenses is something very rare. Rarely it would be given. So that is what I will consider as outstanding. Here, something very important is missing, which has to come in the production overheads account. That is what is missing. Very good, Gurmeet. Very good. Yes, Rohan. Now you are getting it right. Yes, Priyanshi. Correct. Very good, Jaindra. Good, good. So now you all are getting it. The most important transaction which is missing is my charging to WIP, because production overheads has to charge to WIP. This transaction is the balancing figure. I will balance this account, and this transaction I will consider it as the amount which I have to charge, because this is what is the most important transaction of overheads. Without this, the overheads account cannot be completed. So this balance figure is representing the overheads which I have to charge to factory. Correct? So how much it is coming to? 18, 23, 183 I'm getting. So the amount which will be my amount to be charged is 183. And this account is also closed, tallied. Now I proceed. Selling administration I've incurred. They have given nothing for charging, so we transfer it to cost P&L. So to SN, find closing balance, they have given me. Again here, some very important transaction is missing. That is my balancing figure. What is that important transaction which is missing? Students, what is that important transaction of WIP which is missing? Very good, Priyanshi, Gurmeet. Very good. Yes, good, Dharani, Jaindra, Almas, Rohan. Superb. Very good, Banipreet. See, this is now you are understanding the accounting, because when you are able to identify what is missing, it means you have understood. So what is missing is the amount of my finished goods which I transfer to go down. So this finished goods is missing. So how much it is coming to? 80, 130, 150, 150. This is 333. Please confirm. So this I will be posting to the finished goods account, to WIP 333. Correct? Now, in my finished goods, I have opening. I have the finished goods received from factory. I have the finished goods which is given to my customer. So here I will have the closing balance. 27, 457. Please confirm. The balance that I'm getting here is 457. No, not 457. 403. Yes, 403. So the balance in my finished goods representing the closing balance of finished goods is 403. Now I come to COS. The amount represents the cost of goods sold. That is the goods which I've sold to customer. I will transfer this at the end to cost P&L. So again, this account is closed. In cost P&L, I will get this cost of goods sold entry. Now cost P&L, I will find out net profit. I have cost of goods sold. I have sales. I have the losses or the under or absorption figures. Now I'll find out my net profit, which will be transferred to my capital and my reserves account. So 360 plus to 390, 390, 60, 60 minus 357. So profit which I'm getting is 57, which I transfer to CLC 57, representing net profit. Is this clear, students? Understood? Building construction is already closed by transferring it to CLC. Now I'll have my balance in my CLC account. Students, have you understood the transactions completely? Now, Banipreet asked me to again explain the last entry. I'll explain. Banipreet, bada, in last transaction, they had given me the company's gross profit margin, which is given 20% on sales. Now we have no posting of gross profit figure, or else I know 20% of sales is coming to 90. I would have done some posting, but we don't have any entry for gross profit figure. Yes, we have the entry which we now just calculated, but that is net profit. So they have not given net profit, they have given the GP margin. So this GP 90, nowhere it is posted. Then what I do is I try to understand what could be the use of this GP margin data. So I identify that if from sales, I reduce my gross profit, what is left is the cost. Cost of what? Of the goods which are sold. So from the sales, that is, it is the value of the goods sold, but at selling price, if you reduce the gross profit margin, what is left is the cost of the goods sold. So by reducing this 90 from the sales value, what I got is my goods sold cost. And you would be remembering the earlier two sums that when you are given the cost of goods sold, the transaction is customer debit, your go down credit, because customer is getting these goods and your goods are going out of the godown. So Banipreet beta, this is what is the last entry or transaction. Is this clear to all students? The entire sum? Great. No doubts? Perfect. So now we have a short break of 10 minutes. My watch is showing me 8:37, 8:38, you can say. So we rejoin at sharp 8:48 so that I can take you to the next part, that is the reconciliation. The next type of accounting is integrated, which generally is not asked in the exams, as I said, majorly because practically non-integrated is followed. But for academic purposes, we should also know non-integrated. Now, see, the basic difference between integrated and non-integrated you can identify from the opening balance. So where in the opening balance you are given the balances of your assets and liabilities accounts. See, these were missing in non-integrated sum. So in non-integrated, you will not have these account balances. Instead, you will have the CLC account. Here, besides your regular cost accounting accounts, you are given these assets and liabilities. Now, as I had explained earlier, what will happen if I have to solve a sum by non-integrated, then this account won't be there. Instead, I will open the account called as cash and bank. I will open the account called as sundry debtors. I will open the account called as sundry creditors. Capital and reserves. Maybe plant and machinery. Now what I will do, I will first do the posting of opening balances. So I will be doing the postings of these opening balances. After I have done this, now when the transactions are given, all other accounts will be same. So I'll have my SLC, LCC, PO, AO, SND, WIP, FG, COS, cost P&L. Building construction, chalo, it is something very unique to the previous sum. So up till this, all accounts would be same. Instead of preparing CLC, now I will be preparing these accounts separately. And now my postings will have these accounts instead of the CLC account. So let me just explain. So after the opening balances, I will go to the transactions and do the postings. So now first transaction is material purchase, which is on credit. Now my entry is material purchase, so SLC debit. And now my second effect would go to my creditors account. So now what will happen? For material purchase, here I will debit. But instead of writing CLC, now I will write sundry creditors. And my second effect will come here by SLC and the amount. Material issued to production. For direct material, what entry we pass? WIP to SLC. For indirect material, what entry we pass? POC to SLC. Now this entry is same, whether it is a integrated or non-integrated, because this entry does not require asset and liability account. So for direct material, which is issued to production, it is WIP debit SLC credit. For indirect material, which is issued to production, it is production overheads debit SLC credit. So this remains same even in case of integrated. Now, new transaction. This you did not find in non-integrated because there will be no entry for this in non-integrated because these are pure financial transactions. What will be the posting for this? Sundry creditors will be debited. Cash bank will be credited. Cash bank is debited. Sundry debtors is credited. Regular accounting entry. Correct, students? Then we have depreciation on assets. Now this depreciation, what is the account where depreciation is to be posted? it is your production overheads account. So I will debit the POC account. And what is the second effect? The second effect is this depreciation, if you remember your accounting entry, is charged, maybe the wrong word, is calculated on the asset value. So we always credit the asset account. But here, if you see, we have the depreciation provision account. So in accounts also, where you have the depreciation provision account, you credit the depreciation provision account. So debit is depreciation, credit is depreciation provision. Now for depreciation, we have the production overheads control. So instead of depreciation, we'll have the production overheads control, and credit is depreciation provision. Had this not been there in the sum, that you're not following the depreciation provision method, then it would have been created to the fixed asset account itself. So again, this is a pure accounting entry. Then the same transaction, wages paid, which includes direct 10,000, so balance is indirect. Finished goods produced, we know the transaction, it will go to finished goods from the WIP. Cost of goods sold, again we know it will go to COS from the finished goods. So these entries will remain same. Again, overheads incurred. So all these three accounts are debited. So POC debit, AOC debit, SNDC debit to cash or bank. So the credit will go to cash bank. That is the only difference. Overheads charged, it will remain same. WIP to POC, FG to AOC, COS to SNDC. So students, please understand that there is no much difference in integrated, non-integrated, except for the transactions pertaining to the assets and liabilities. So basically now what will happen? You will be having these accounts for your assets and liabilities, and majorly now for all expenses incurred, cash bank would be credited. Then for purchases made, the second effect would be in sundry creditor, because the purchases are made on credit. So you'll have this entry. For sales, we were now posting the sales to the CLC. Now the sales would be posted here. So the entry would be by sundry debtors. So cost P&L debit, debtors debit, cost P&L credit for sales. So the sales amount will come here from your cost P&L. So this would be the only difference. Otherwise, all internal entries like of expenses charging or overheads transferring, overheads charging, product transferred from one account to another, all remain same under integrated and non-integrated. So student, these are the entries for the integrated accounting. Now let me go to the most important part, which is reconciliation. Reconciliation of what? Reconciliation of profits. Now, what is this profit reconciliation? For this, let us understand. As I already explained, you have two different set of books. One is the financial books, one is the cost accounting books. So in financial books, you have finally the trading and profit and loss account, where traditionally whatever entries you are passing, those entries will come. Then all expenses are debited and you have net profit. This will be from your financial books. From your cost accounting, you have a cost sheet, which you have studied or you will study in the cost sheet chapter, which we did in my first lecture, also giving you an overview of how costing is done. In cost sheet also, you have this raw material consumed, direct wages, direct expenses, prime cost, factory overheads, WIP, factory cost, administration overheads, cost of production, selling and distribution. Sorry, you have opening, closing, finished goods. cost of goods sold, selling and distribution overheads, cost of sales, and again net profit. Now please understand what the point is. The point of reconciliation is the net profit which is appearing here and the net profit that you get in your cost sheet. Now, we are dealing with the books of the same person, same business, same year, but the profit which is appearing in my trading P&L, that is financial books, and the profit appearing in one of my statement from the cost books, that is the cost sheet, will always be different. Now, since these profits are different, the question is, why are they different? And if they are different, is something wrong? Answer is nothing is wrong. Both these are separate statements prepared under separate books with separate or different logics. So there is bound to be some reasons why the net profit figure here and the net profit figure here will never match. But as a prudent business, we should always ensure that whatever is this net profit, that has to reconcile, so that we are assured that there is no problem in either of the books. Now, how to do this? That is what is the reconciliation over here. Now, for this, you have to first understand what could be the causes for having a different net profit here and a different net profit here. So first causes is the amount of these expenses which are debited. Now here you have expenses which are on actual basis because accounts are prepared taking actual figures, and the expenses which we have charged in costing, they are using some estimated charging rates. So we have charged these expenses using some estimated charging rates. Now definitely the expenses, if here they are on actual basis and here they are charged using some predetermined rates, will not match. So the first reason for a difference between net profit is difference in expenses, which is actual versus charged. For differences, there are certain items which are different in, like dividend, you may have interest. These are not found anywhere in cost sheet. Similarly, you have certain expenses in P&L, like you have all abnormal losses, like loss by fire and all. You have your financial expenses, like interest on loan and all. And you have some written off figures, like goodwill written off. All these are pure financial expenses. So on either side of P&L, you have some financial incomes, financial expenses, which do not find in items. In financial books, you have financial incomes, expenses, which are not there in cost books. In costing books, you have notional expenses like salary to proprietor, rent of proprietor premises. We included in cost sheet, this we have discussed in our very first lecture. Now, these are the differences which are either here but not in cost, either in cost but not in financial. So again, where the items are different, that will cause difference in the net figure, which is the net profit. And the third reason is stock valuation. Now, what is this stock valuation? Stock books, like here you have opening closing stock. In raw material, in WIP, in finished goods, we have opening closing stock. Now, these stock values also differ. So you will have all the stocks in both books. So here also you'll have opening closing stock of raw material, WIP, finished goods. You'll have all three. And here also you'll have all three, but the difference would be in the valuation. So the valuation of stock in financial books will not match with the value in cost books, thereby creating difference in the net values, that is the net profit. So these are broadly the three reasons. First, difference in expenses. In financial books, you have actual. In costing books, you have amount which are charged using predetermined rate. This will never match. Similarly, certain items are there in financial books, not in cost books, there in cost books, not in financial books. And third, the values that you are considering in both the books, they will not match. Now, once I know the reasons, what we do, this we studied even in our accounts in 11th standard, we prepare a reconciliation. Here we prepare either a reconciliation statement, like how we used to prepare bank reconciliation statement. Here we also prepare the same type of statement, or we prepare memorandum reconciliation account. So the difference between the two is format. So if you have to do reconciliation in the account format, it will be opening, closing balance, debit, credit entries. And here it would be a statement format. Now, what is the statement format? You would be given profit of one of the books, which will be your starting point. So let's say profit as per financial P&L. This will be your starting point. Now you have to identify those differences which have to be added, those differences which have to be subtracted. And after doing these addition, subtraction of the differences, what is the balancing figure will be your profit as per cost sheet. Now, if the same thing has to be done in the reconciliation format, how you will do it? Please understand, students. Now, your starting point given is profit as per financial P&L. Now, we all know profit opening balance is a credit balance. So what I will do is I will put it on the credit side by profit as per financial P&L. Now, whatever has to be added. Now, when it will get added, if I post it on the credit side, so the same things which I have to add, I will post it on the credit side of this statement. Whatever differences I need to subtract, I will post it on the debit side of this account. So, same thing which is done in the statement format is also done in the accounting format. Now, the balance which will be left is my profit as per my cost sheet. So please understand the formatting first. You can solve it by any of the formats, whatever is asked in the sum. If they have not mentioned anything in the sum, it is recommended that you follow the reconciliation statement because it is generally what is acceptable at this level. But generally, they will specify that prepare a reconciliation statement or prepare a reconciliation account. But if not specified, you should prefer the reconciliation account format. Now comes the only point to be understood is what differences we have to add, what differences we have to subtract. Also, opening balance can be financial profit and loss figure, or in some cases it will be cost sheet figure. Whatever it is, what to add, what to subtract, this is the main question. So let me take you to one example, the example from the exam itself. And with that example, we will understand these things. So, and also I'll be solving this by the reconciliation account format so that this new format will also be clear to you all conceptually. Fine. So let me take you to a question. Now, this is a typical question, exam question. What is it saying? From the following data, prepare a reconciliation statement. Now, they have asked me to prepare a statement, but Here again, they have said prepare a memorandum reconciliation account. So I'll be preparing account only. Now the starting point that is given is profit as per my cost sheet. So I will write here by profit as per cost accounts. Cost sheet, cost account, whatever they are saying, 145,500. Now, these are all the difference creating transactions for which I have to do add or less. Now, students, you may have studied reconciliation at 11th. I don't know how you studied what is to be added, what is to be subtracted. I have my own method of doing this. What is that? Let me explain. And if you are able to apply this method here, I can assure you one thing. You will be able to do any reconciliation of any subject applying the same method. What is my method? I use this. This hand represents my profit as per my costing books. This hand represents my profit as per my financial books. So, profit as per cost books, profit as per financial books. So, these two hands represent the level of profits. Fine. Now, again, the same point, understanding the transactions. We have to now understand the transactions correctly so that we can understand and appreciate how they are handling these type of reconciliations. So pay attention. Very good, Priyanshi. Very good, Rohan. Chalo, let us see then. Now, first understand the transaction, what has happened. So firstly, the difference is in the factory overhead, that is the works overheads. They are saying it is under recovered. They also may call it as under absorbed. They may also call it as under charged. All mean one the same. Now, what do they mean by under absorbed, under recovered, under charged? Please understand, students, charging, this happens only in cost sheet. In cost sheet, the amount of expenses which we write against these entries, these are called as expenses charged. And in P&L, the amount of expenses which we are writing against all these expense head, they are your actual expenses or they are your expenses which are incurred because they are actual. So here you have the amount which is charged. Here you have the amount which is incurred. Now, what is under absorption? What is under recovery? So let us say the amount here is 1 lakh. And the same thing here is 90,000. It means you have charged that amount less in your cost sheet. Why less? Because costing is done on estimated basis using predetermined rates. So the amount can be less or more. So in this example, the amount is less in cost sheet. So the amount charged is less. So automatically, whatever is the difference, 1 lakh is the actual, you have charged here 90. So the difference is 10,000. You will say this 10,000 is under recovered, under absorbed, or undercharged. So whenever they are in the sum saying that any amount is under recovered, under absorbed, undercharged, you have to understand that this amount is less in the cost sheet. Now comes the most important point. My hands represented what? My hands are representing profits. Correct? Costing profit, P&L profit. Now please understand, when the transaction says that works overheads are undercharged, it means in costing, the amount of expense, because works overheads is expense, is less. Undercharged means it is less. Now, if the expense in costing is less, what will be the impact on the costing profit? Obviously, it will be more. So be clear with this. Again, in BRS, add less is not that difficult if you understand what has happened, what is the transaction. So I repeat, if the transaction is saying that there is some under absorption, under recovery, it means they are talking about that in costing, that amount is posted less. but it is an amount of expense, and these two hands represents my profits. Now, if mathematically you'll understand this, that if any amount of expense is less, what is the impact on profit? The profit increases because the expense posted is less. So now I get two levels of profits because of the first transaction. Costing profit is here, financial profit is here. Now, once you get this level, add less is simple. Now what you have to see, what is the starting point given in the sum? If the starting point is financial profit, so you are standing below, you have to go up, you will add. But if in the sum, the starting point is costing profit, you have to climb down, so it is less. So please understand this. These are my profit values. Transaction is in costing, some expenditure is under absorbed. So where the expenditure is under absorbed, the profit has to be more logical. And once I get these levels of profits, now I have to decide add less. How it will be decided? It will be decided by seeing the starting point. So in this sum, my starting point is cost profit. So I'm standing upstairs. I have to climb down. So this has to be subtracted. So I get my first entry or effect. Right? My first effect is for works overheads under absorbed, which I have to subtract. And the amount is how much? 9,500. So I have to subtract 9,500 in reconciliation. Right? Now we have understood that how to subtract anything in this statement format. If you are doing the statement format, for subtracting, you will write it here. So we write work overheads under absorbed, under recovered in the inner column 9,500. Now the same thing if I have to do by the statement format, what I will do is I will write 2, because I have to write it on the debit side, works overheads under absorbed, under charge, under recovered. So simply put it on the debit side. Mathematically, it will automatically get subtracted from the opening balance of cost profit because they are on the opposite sides. Perfect, students. Going to the next, administrative overheads under absorbed again. So I need not now spend time in deciding. I know for under absorbed, I have to subtract. So again, I'll subtract 22750. To administration overheads under absorbed, under recovered, under charge. I'm purposely using different terminologies so that you know all the terminologies. They may call it as under charge, under recovered, under absorbed. Now they are saying selling overheads overcharged, over recovered. Now we know what will happen. It will be the opposite, but let me explain you again. So these are my levels of profits. Now they are saying some expenses are overcharged, over absorbed. Now again, remember, charging always happens in costing. Now in costing, if that expense is more, it is over. What will happen to the profits? Because these are levels of profits, the profit has to come down. Now, since the expense is more, the profit is less. Now in this case, once I get these levels, I have to decide add less, for which I have to see the starting point. My starting point is costing profit, which is low. So I have to climb upwards. I will add. Now this I can do orally also, because if for under absorbed I have decided to subtract, so by default for over absorbed I have to add. But still, for explaining you my method, I did it with the hand so that you can understand. So this I have decided that this I have to add. So by selling overheads overcharged, amount is 19,500. Fine, students. Now, bad debts written off. Understand, this is a financial transaction. We do not record this in costing. So the impact of this is only on the financial profit. Now what they have said, bad debts are written off. Now we all understand bad debts written off is a loss. And if something is shown as a loss, what will be the impact on my financial profit? It will reduce. So my financial profits are less because of this transaction. So I get the levels. Now, once I get the level, see the starting point. In this sum, the starting point is cost. So I have to climb downwards. It will be less. So 2 bad debts written off. 9,000. Since I have to subtract, I have put it on the opposite side of the profit. So I put it on the debit side. Now comes stock differences. Overvaluation of opening stock in cost books. Please understand, they are talking about overvaluation of opening stock. Firstly, understand this. Opening stock is a debit item. Now, if debit item is overvalued, that is the value or the amount of that debit item is more, what will be the impact on my profits? My profits will reduce. Now, this impact is in the costing profits. So, in my costing books, the opening stock is overvalued and opening is a debit item. So, the impact of this is it will reduce my costing profit. So, my costing profit will be less. And since it is less, I have to climb upwards. So, I have to add this difference by overvaluation of opening finished goods in cost accounts. 15,000. Correct? Again, overvaluation of closing stock in cost books. Now, we all know closing stock is a credit item. And if credit item is overvalued, what is the impact? It will increase my profit. So my profit is increased. Which profit? Cost profit. So because it is a closing stock and it is overvalued in costing books, my cost profit is increased. Now this is my starting point. I have to come down. So now less. 2, overvaluation of closing finished goods. How much is the amount? 7,500. Correct, students? Now, interest received, rent received, both are income entries. And these are financial incomes, means they do not come in costing books. Now, if in your financial books, you have posted 2 entries of incomes, what is the impact on your financial profit? Obviously, because of income entries, the financial profit would be higher. So because of both these transactions, my financial profit is appearing higher. This is the level. Now my starting point is costing profit, so I have to climb upwards. So by interest received, by rent received. 3750, 27,000. And then another transaction is preliminary expenses written off. Now again, all these written offs, preliminary expenses, obsolete stores, goodwill, all these happens only in your financial books. Now this is an item of expense. This is appearing in my financial books. So what is the impact on the financial profit? The financial profit has reduced. I am standing here because my starting point is cost profit. I have to climb downwards, so less. 2 preliminary expenses are written off, 18,000. Done. Now all these are posted. So I have to simply find out the balance, which will be my profit as per financial P&L. So students, understand this. This technique, which I just explained, this technique will help you in solving all types of sums. Whatever is the starting point, you have to first decide which profit is up and which is low. Once you have decided which profit is up and low, depending upon the starting point, either you have to climb upwards, so add, or if this is the starting point, you have to climb downwards, so it is less. Please remember, these hands represent the balance of profits. Keep that in mind. Accordingly, apply the transaction or the difference, understand the difference is representing what, where the difference is, so that you can decide the correct levels of profits. Once you have decided these levels, finding out address would be easy. Tell me your doubts in this. If you have not understood either the format or something in the add list, let me know your doubts so that we can discuss on your doubts. Yes, Priyanshi, we are finding a difference between both the sheet.
Doubt is that in this question it's given profit as per cost and profit, and we have to find profit as per cost sheet. So this in this I'm confusing
One second. They have given profit in this sum, profit as per cost, and you have to find profit as per
cost accounts.
but a cost accounts is given. You have to find as per financial.
Okay. Yes, and now I got
See,
it.
1 second. There's some problem. You are right what you're saying. See, there is some typo error. It should be prepare reconciliation account showing the profit as per financial books. You're right, Beda. There is some
Yes.
typo error. So they have given profit as per cost accounts. You have to find profit as per financial. Correct?
Yes, sir.
It cannot be cost both sides. Right?
Yes, sir. That's why I got confused.
Correct. See, like for
Yes, sir.
example, here they have now shown a loss as per cost accounts, and also they have given you the financial accounts loss. So here, like in BRS, they may be giving you both the profits or both the losses, and then they are asking you to prepare reconciliation. So you may take starting point as the cost account loss and reach to the financial account loss, or vice versa. When both figures are given, you can take starting point as financial and go to cost. So it will always be financial versus cost and not cost versus cost.
So, sir, in this question, we will be able to get the answer that we are right or wrong in the exam itself.
Exactly. So now in this type of question, in fact, these questions, according to me, are more risky because see, when you are not knowing the other balance, at least you go ahead to the next sum, assuming you're right. But here in this, even if one entry is wrong, your balance will not match with the other balance given in the question itself. And this is where you will end up wasting more time in the exam because you'll now try to find out what is the mistake. My humble suggestion is please do not spend more than 10 minutes on this question because this question will come for 8 marks maximum, 6 to 8 marks. Now, if within 10 minutes, if you are not able to find out what the reason for difference is, forget it. It may be only mistake of one posting or one reconciliation, but that you will not find out even if you spend half an hour in the exam and it adds up to your pressure and you waste your time. Instead, go to the other sum. You will only miss 1 or 2 marks out of 10 because if one posting is wrong, that will not give you 0. You are given point-wise marking. So whatever postings are correct, whatever your address is correct, you get the stepwise marking. So don't waste your time in identifying the mistake because in that exam condition, even if you are looking at the mistake, you will not get to know that this mistake you have committed. So that will mess your entire question. Fine?
Yes, sir. Sir, one more doubt.
Yes, tell me.
So that question we did, that question number third from assignment, in which we have seen new entries. So what could be the weightage of that type of question? That was amazing question.
10 marks, 10 marks, not beyond
Yes.
that. Because the institute wants to cover maximum number of questions in the paper. So they will not ask you questions which are of 16 marks. Those times are gone when we used to have one question of 16 marks. Now here 8 marks, 10 marks, height 12 marks, not beyond that. But I believe it should be 10 marks.
Okay, sir. Thank you. Thank you.
Okay. Now students, let me take you to one more sum. So one sum we did where profit balances were given. Now another sum that we do here, loss balances are given. Now many times the students get confused when a negative balance is given. Then they will have a question, sir, how to do reconciliation, whether we will write opening balance as negative. Remember one thing here, since you have to do it in the statement format. If this would have been here you have to do it in the account format. That is a memorandum reconciliation account format. In accounting, you do not write any negative balance. So We will not follow the negative balance method because that is not there. When you have to prepare a ledger account, you do not write negative balance anywhere. You have to write normal balance. Now, when losses are given, how do you do this? So firstly, in this sum, both losses are given, cost losses also and financial loss also. Now, previous sum, I started with cost and we went to financial. Here, we will start with financial and go to cost just for a change because both are given. We can do it either ways. So here, I will take the starting point as my financial account loss. Now, I have to prepare the reconciliation statement. Correct? So, I will prepare memorandum reconciliation account. Now, opening balance is a loss. Again, beta, see the logic. What is the logic? What is the balance for a loss? Is it debit or credit? Losses, opening balance is debit. So I will start by putting the opening balance of loss here. And as I said, I'm taking the financial loss as the starting point. So I will write to loss as per financial books. How much is the financial books loss? 884. So simply, if it is a loss sum, there is no writing of negative values. You will put the opening balance on the debit side. Now, these hands will now represent losses. Till now, they were representing profits of cost, profit of financial. Now they will represent losses. Losses as per cost, losses as per financial. So remember this hand is now loss as per cost books. This hand is loss as per financial books. Fine. Now, let us go to each of the differences. They say factory overheads over-absorbed. First, understand the transaction. Over-absorb means that that expenditure is more in cost sheet. That is clear. Now, coming to the losses. Now, remember these hands represent losses. So this is cost loss, this is financial loss. And now, as per this transaction, the amount of factory overheads, which is an expense, is more in my cost books. Now understand this. If an expense is more in costing, what will happen to the loss? The loss would be higher. So the same hands method we will apply. The only difference is now these are my losses. So if the amount is over absorbed in my cost books, it means my cost books loss would be more. So this is the level which I get, level of losses. Now what is my starting point in this sum? My starting point is loss as per financial books. I have to climb upwards. So I will add this amount. Now interesting, I've decided to add. How it will get added? My opening balance is on the debit side. So in order that this amount gets added, I have to post it on the debit side itself. So I will write it on the debit side saying to factory overheads over absorbed. So see, since now my opening balance is on the debit side, whatever I have decided to add, I have to post it on the same side. So it will be debited on the debit side. Next, administration overheads under absorbed. Now, if over absorbed was add, without wasting time, I know this is less. And for less, I'll post it on the credit side. So by administration overheads under absorbed 24,000. So simply for add, you have to remember it is on the same side as the opening balance. For less, it is on the opposite side. Simple. Whether it is profit or loss, this will not change. Yes, but for profit and loss, what will change? The side where you write the opening balance. Next, depreciation in financial books is 220. In cost books, the same thing is 245. Now here, they have given you expense of both the books. You have to find out yourself whether it is under or over absorbed. Now, as you can see in cost account, the expenses is higher. I will say it is over absorbed by rupees 25,000. Now, what we did for over absorbed, we have added the difference. So again, to depreciation over absorbed difference. Correct? Now, you have interest on investments, you have transfer fee credit, you have stores adjustment credit. Now, all these three represents my sundry incomes. And obviously, they will never be included in cost because they are only in financial books. So one is interest, which I have earned on my investments, transfer fee credit, which again I have earned, and stores adjustment credit, which will be the difference in my stores having a credit balance. Now, all these three are in my financial books. Again, pay attention. These are losses. Now, these three transactions represents income in my financial books. Now, what will happen if I'm having some incomes in my financial books? What will happen to this hand? This hand represents loss, so it has to come down. Please be clear what the hands are representing. In this question, the hands are representing loss. So, if there are certain incomes in my financial books, the impact of these incomes on my losses is that the losses will be reduced. So, the effect of these three transactions is that my financial loss is less. Now, in this sum, what is my starting point? My starting point is financial books. So, I have to climb upwards. So, all these three I have to add. Add means I have to put it on the same side where I have written the opening balance. So it will be 2. Interest on investment, 2 stores adjustment credit, and 2 transfer fees credit. 64, 8, 16. Correct? Then you have income tax provided, which is an expense, and interest on your loan funds, which is again an expense. And again, both these are financial expense, financial items. Again, they will be appearing only in your financial books. Now again, both these are appearing in my financial books. Both are expenses. What is the impact of expenses on your losses? My losses will increase because these are expenses. So now the levels are, this is my cost loss, this is my financial loss because of these two items. What will be the effect? My starting point in this sum is financial loss, so I have to climb downwards. So both these have to be subtracted. So by income tax provided by interest on loan. How much are the amounts? 154, 263. Now you will get the balancing figure, which will be by loss as per cost sheet. Is this clear, students? Have you understood the reconciliation part? Actually, it is very easy. You have to just understand the side list, which again, according to me, is easy, provided you keep in mind that first, what these hands represent. In a profit sum, it represents profit. In a loss sum, it will represent loss. The second thing is, please understand what is the impact of that transaction on these profits or losses. Which profit or loss is going to increase or decrease. Once you identify that, then the balance is easy. Now you get the levels. Now check what is your starting point. If this hand is your starting point, you have to subtract. If this hand is your starting point, you have to add. So this is the reconciliation in cost accounts. Obviously, Priyanshi. So since we have to go from the starting point, so that hand has to go to the other hand. So if that hand is lower, you have to add. If that hand is higher, you have to subtract. Is this clear to all, everyone? Has everyone understood everything in cost accounting and the related next concept, that is reconciliation? Please solve sums from your modules. Please solve sums of all past exams, MCQ, sorry, not MCQs, MTP, RTP. Please solve it, because the more you practice, the more will these concepts get crystallized, the more you will get the speed and accuracy, and these are the things required for scoring and passing. Correct, students? So with this, we close our today's session. I hope you all enjoyed, you all understood, and it will be with you up till your exams at least. I wish it remains with you always, so that tomorrow when you're actually practicing or taking up any employment in this particular subject, this should be there with you. That is why I'm trying to focus more on the logical part of everything, because logics, once you understand, it gets absorbed, it stays with you forever. So with this, thank you, students. It was really nice today again having interactions with you all. So let us keep our focus on our subjects, keep our focus on our dreams, and let us work hard to make our and our parents' dream a reality. Thank you all. Take care. Keep studying. Bye-bye. Yes, sir. We can close. Thank you, Ashokji.